While all the headlines are screaming about the price of gold, there's a much quieter and, you could argue, much more important story unfolding in the background. It's not about how much gold costs. Nope, it's about where the world's wealthiest are choosing to hide it. Not long ago, gold prices absolutely surged past a record-breaking $4,300 per troy ounce. And yeah, that's an eye-watering number for sure. But that price tag, honestly, it's just a symptom of a much larger, more fundamental shift that's happening in the global financial world. Because the real story, the one we're really digging into today, is about this massive migration of physical assets. You see, the super wealthy are fundamentally rethinking where they stash their treasure, and they're moving it away from traditional Western strongholds like London and Geneva. So where is it all going? And maybe more importantly, why? All right, so to really get our heads around this great gold migration, we've got to start with the push factors. It all kicks off with a profound crisis of trust in the traditional financial system. You've got this potent cocktail of geopolitical unrest, global economic uncertainty, and a growing mistrust in governments that's making wealthy investors, well, extremely nervous. There's this lingering fear, a ghost from the not-so-distant past, that the entire system could be a lot more fragile than we think. And that fear is driving them to find something real, something tangible and safe. At the very heart of this fear is a concept called counterparty risk. Now, in simple terms, it's the risk that the institution holding your assets, your bank, your fund, whatever, won't actually be able to give them back when you ask for them. It's the risk that their promise is, well, breakable. And listen, this isn't just some abstract, theoretical fear, right? The 2008 financial crisis was a brutal, real-world lesson for everybody. It proved that even the biggest, most trusted names in finance could teeter on the brink of collapse, showing that a promise on a screen might not be as solid as you'd like to believe. And this is where the difference becomes crystal clear. A paper asset, like a gold ETF, is really just a financial claim. It's vulnerable. But a physical gold bar sitting in a vault, see, that's not a claim on an asset. It is the asset. It's your private property, and it exists completely outside the financial system. Right now, that distinction is everything. So, if all this wealth is getting pushed out of the West, where exactly is it being pulled to? The answer, more and more, is a small, stable, and incredibly wealthy island nation in Southeast Asia. So, what's Singapore's secret sauce? Well, it really boils down to 3 unshakable pillars. First, it has pretty much no enemies, making it this bastion of geopolitical stability. Second, its entire economic model is built on client confidence. And third, it's not just rich, it's incredibly well defended. And this really gets to the heart of their economic promise. For Singapore to ever seize client assets, which is something some investors fear could happen elsewhere, it wouldn't just be bad policy. It would be, and I'm quoting here, economic suicide. The country's entire prosperity is directly tied to its reputation as a safe haven. Look, this isn't about chasing next quarter's returns or trying to time the market. This is the long game we're talking about. We're talking about building a fortress for intergenerational wealth, making plans that will secure assets for the next 20, 30, maybe even 40 years down the line. And at the end of the day, it all comes down to something incredibly human. In a world full of uncertainty, that psychological comfort of knowing your life's work is secure, that peace of mind, well, that can be just as valuable, if not more so, than pure profit. Okay, so we've talked about the why, but what does that peace of mind actually look like in the real world? To really get that, we have to go inside the fortress itself. Let's just talk scale for a second. A single one of these new facilities, like a place called the Reserve in Singapore, can store up to 500 tons of gold. And what's that worth? Well, that single building can hold a value of $64 billion. And to physically support that kind of wealth, the engineering is just incredible. The foundation is so deep, so strong, that the floor can handle a load 45 times stronger than your typical parking garage. This isn't just a warehouse, it's a purpose-built fortress. So you can forget everything you've seen in the movies. Real vault security isn't about dramatic explosions and dodging laser grids. No, it's about quiet, layered, preventative defenses. These places are built to a standard designed to delay a professional intruder for at least 1 hour, which is way more than enough time after silent alarms have been triggered. The whole point is to stop a threat long before it ever gets close. Okay, so let's zoom out. What does this whole migration really mean for the bigger picture, for the future of where global wealth is stored? Now, we have to keep this in perspective. London is still the king of the hill, trading over $100 billion worth of gold every single day. Singapore, right now, its volume is less than 1% of that. So let's be clear, this isn't a seismic shift yet. But it's a small stream that is steadily growing. And while the volume is small for now, the trend itself has real geopolitical weight. The fundamental appeal of places like Singapore, Hong Kong, and Dubai, that's not going away. Their governments are actively working to attract this wealth, and that signals a quiet but steady shift in the global geography of money and power. So who are the people making these moves? It's primarily Western English-speaking clients. A lot of them are entrepreneurs from the US, Europe, and Australia, people who built their own companies from the ground up and are now taking direct, hands-on control of preserving the wealth they created. At the end of the day, this great migration of gold is more than just a financial trend. You can think of it as a barometer for global trust. It reflects a deep-seated search for stability in a really volatile world. And it poses a fascinating question for all of us. As uncertainty continues to grow, where will wealth find its next fortress?